Hello and welcome everyone. I am Aditya Kumar Sa and I am thrilled to be hosting this session for Dolphin Market. I specialize in stock trading and I bring years of experience in equity advisory, portfolio management and market analysis to this platform. Over my careers, I have had the privilege of managing portfolios worth over 150 crore INR, delivering a compounded returns of 60 to 70% for my clients. So it's not only we are talking, I have been able to provide greater returns of 60 to 70% for my clients. So my expertise lies in creating data driven strategies with a strong focus on fundamental analysis. So all this culminates in a well-rounded investment advice to help clients make informed decisions. So I guess you have got my point and you are ready for the analysis. We will be checking with the homework assignment first. For the two sessions, we have assigned you the homework, right? So let me check for the latest session assignments, all of the clients. So yeah, you have been doing great. All of the people who are attending the live session have been submitting the assignments. For few who haven't submitted, wasn't the last session exciting for you? Wasn't it generating energy in you to pick up the good stocks, the operator strategy? So also I want to make sure that I want to inform you that during the market hours we execute our strategies with the goal of earning profits, right? And after market hours it's all about learning how to earn those profits. So earning is also important during the market hours. We are providing with the strategies and you are earning a lot. We have been consistently delivering with the returns. And talking about earning, we are talking about learning, sorry, earning we have done in the morning. So in the evening we will be talking about learning, right? So talking about learning, we have to learn how to earn those profits so that our knowledge gets upgraded and we will be able to choose the stock, right? Therefore everyone should engage in the live broadcast, understand that learning and mastering require practice. Just remember, simply attending this session won't work, simply watching this lecture won't work. You have to understand. You may understand in the moment but you might forget it later, right? So just attending this session won't work. Make sure you are doing with the assignments at a right time and a right pace so that you are understanding each and everything and not forgetting it later. So I request each and everyone take notes during the session and complete the homework assignments after work. Only by doing so you will be able to turn your losses into gains and achieve consistent profitability in the later stages. So just remember, you will be turning your losses into gains once you are completely understanding what we are telling to you, the strategies which we are providing and the assignments which we are giving to you. So only by doing so will you will be able to turn your losses into gain. How many of you here are here to turn your losses into profit? Just let me know in the comment section, right? I can see most of you have replied yes, yes. So most of you are here to turn your losses into gains, right? So we have seen. Oh, Raptor is here. Hi, Raptor. Good evening. I think the day is going great for you, and you are learning from our assignments. And you have been seen that you have been providing the homework too on a regular basis. That's very great for Raptor, right? And you have been consistently following our session to make the profits from the markets. Very good to see you are here again. Now let's move to the content of today, right? We have been knowing that we have been telling only by doing the homeworks assignments which we give it to you and watching our lectures you will be able to turn your losses into gains and achieve consistent profitability in the later stages. So just remember, you are completing all of the things with you and attending this live session. So I want to ask few questions. I have a few questions in my mind from the last two sessions so that you are very well aware what we have talked in past two sessions. So just let me know to identify if a stock has operators or not. What should we look for? Just tell me in the comment section. What should we do to identify if the stock is having operator? Please write down in the chat. So yeah, many of you are writing correct, right? So to identify the stock have a major operators or not, we have to look for the candlestick pattern. It's very correct, very correct. Everyone is doing really well. So I will explain you more deep to identify if a stock has a major operators. We should look for the candlestick pattern which is continuously growing and it's making an upside in the stock prices too. So this is the sign to identify major funds. And what should we do to second question, right? So what should we do to determine the main fund's average cost of building their position? What should we focus on? So right, just just tell me, to determine the main fund's average cost of building their position, what should we focus on? Hi Raptor, any guesses? You have been submitting your assignments from all the 2 days. Please let me know your answers. I will be very happy to know it. So yes, we have the answers. We should look at the volumes. We should look at the volumes which is in bulk manner, and then we can identify the cost of building their position, right? So now thirdly, which we have covered in the last session, the second session of our course, why do main fund choose to build covert position? Just let me know, why do main fund choose to build covert position? Please tell me, why do main fund choose to build covert position? Because they want to push that stock to a greater high, right? They want to push that stock to a greater high and make money from the market. So just make sure, why do main fund choose to build covert position? Because they want to push that stock to greater high and make money from the market, right? And all the distribution take place at a higher level to the retailers, and retailer may face loss. So as a retailer, we have to be very cautious, right? And we will be explaining you today, right, how to find buying opportunities for leading stocks during their wave patterns. So we have to be very cautious that we are not a part of distribution, we are a part of pull side and making profit from the market, right? So now, yesterday we have discussed how main funds build positions through small positive candles. Today we will cover how retailers can trade in wave patterns and make money for themselves. So now let's discuss the main strategies employed by main funds. Right. First of all, we have the strategy. So just look at the strategy they have. So first, the main fund operating method. For the first part, we have a strategy called main fund. So I will explain you with more deeply. So first position, we have a open up position. Second, we have a washing out. Third, we have a pull up. And fourth, we have a sipping. So let me explain. This is the first part. This is the second part which occurs in a stock when main funds are operating their stock. This is the fourth. This is the third. Pull up is the third. So which part should we enter? It's a open up position, during the wash out, during the pull out, or during the sipping. Please let me know which should what at what point we should be part of the stock, right? So just let me know the answers. For accumulation phase, when the stocks operator starts accumulating, just look at here, when the stocks operator starts accumulating, the open up position, right? So it's a building position. And wash out, just look at the second position, washing. It's a wash out phase, 4 seconds, shaking out weak hands. Thirdly, we have push up the market, lifting prices. So this is a push up the market, lifting prices, pull up. So this is the pull up we have. Fourthly, we have distribution. Distribution is selling points, right? Selling point. Just look at the shipping. It is a selling point where the distribution take place. So all the stocks are shipped to the retailers. So now just have a look. I will ask question from all of you. Which two stages among these four do you think are most crucial for earning profits? In other words, Which two stages here out of four allows you to make money? Please post your answer in the comment section. Which two stages, guys? Which two stages will allow to make you money? Please let me know. So I can see the comments coming. Someone is telling distribution, someone is telling starting of the stage, someone is telling accumulation phase, someone is telling a push-up phase. So let me clear it out, guys, for you. Are you ready? Which two stages will allow to make you make money? Are you ready for the answer? Yes, most of you are ready for the answer. So just let's start it. So starting with the distribution stage, the distribution stage, just look at it. With distribution stage, it's undoubtedly not profitable because distribution involves more risks and less reward, and it's easy to encounter pitfalls. Therefore, making money during the distribution stage is most difficult. Just remember that distribution involves a lot of risks and a less reward, and it's easy to encounter pitfalls. So therefore, making money during the distribution stage is most difficult, right? Thirdly, we have the washout stage. You will find that market moves up and down erratically. The volatility is shown during the washout stage, right? Which tests our patience. The market also tends to ride roller coaster due to uncertainty about the duration of the washout. Sometimes the main fund intentionally lose money. Just remember, main funds try to intentionally lose money to shake out weak hands and accumulate the positions at lower levels. So making money during the washout stage is also challenging, right? So washout stage is also challenging, which refers the washing or wash trading. It creates artificial market activity by buying and selling the same assets repeatedly. This is typically done to manipulate market prices or volume. So just remember, it is typically done to manipulate market prices or volume. So what are the purpose of it? To mislead. During washout, the purpose of operator is to mislead the market participants about the true demand or supply of an asset. Just understand this, right? And we have talked about the starting point. What are the starting point? It refers to the either buying, taking a long position, or selling, or taking a short position to enter the market and capitalize on expected price movement. So I hope you got a clear point about the distribution and washout stage. Now let's talk about, so in distribution and during the washout stage, we are not making any of the money. So there are two options left. What are those two options? We all know the two options. Please write it down. What are the two options left? So we have a two option: accumulating and push up. The market stage is our main focus. So whenever the stock is washing out, just look at it. Whenever the stock is opening a position, operators are opening a position and pull up. These are the three phases we have to look for. So these are the three phases we have to look for, and we are denying with the shipping, with the distribution take place, and washing out where the wash out of retailer take place. So we are not entering at the washing out phase and at the shipping phase, distribution phase. We are at the pull up and open up positions phase. So these are the two phases we are having currently trading as of now. So these are the two phases we are currently having. So just look at the methods. So now I will ask just one question from you. Please let me know, between the accumulation and pushing up the market stages, uh, when operator try to accumulate and push up the market in the stages, which one do you think is easier to make money between these two? Okay, between the accumulation and pushing up phases, which one do you think is most easier to make money in? Please type. Please reply with your answer. It's accumulation. If you think it's accumulation, please type accumulation in the comment section. Or if you think it's pushing up the market, please type pushing up the market. So undoubtedly, the pushing up the market stage is easiest to make money in, right? So the pushing up the market stage is easiest way to make money in. Today, lessons mainly revolves So just remember, today lesson will be revolving around earning profit during the pushing up market stages. This is crucial. Please take notes of it, guys. So please take notes. Just make sure you are taking the notes of it undoubtedly, right? So today lesson will be mainly focusing how to make money during the push-up stage. We cannot get at the accumulation phase because we don't have the first hand information, right? So we cannot be a part of accumulation stage. We deny the being the part of washout stage and distribution stage where there are high risks and low returns. So we'll be taking part in the pushing up stages. So this is crucial. So please take notes of it. So now starting, just have a look. So in the previous lesson we mentioned that the main funds accumulate position through small positive candle. We shouldn't enter the market. Do you remember? Do you remember that? What is that? Can anyone tell me? We have mentioned that when main funds accumulate position through small positive candle, we shouldn't enter that market. We shouldn't enter. Why we have told that? What? Why is that? Can anyone tell me? Please let me know in the comment section. So it is because main funds accumulate at the bottom and hold for a longer period of time. So we cannot be holding for a longer period of time because we have a very little funds in it. We have a very little funds, right? We have a very little funds. So we can only participate in the pushing up the market stages. Where this stage occur? Can anyone tell me? This stage occur at the midway, not at the bottom when the main fund established position. So please type midway in the comment section. So this stages occur in the midway, right? Not at the bottom, not at the top. In the midway, we can take the advantage of it. So just write midway in the comment section. Let me check how many of you have wrote the midway. Yes, most of you are writing the midway, right? So it's very interesting to see all of you are taking part in the chat. So my primary task is not just to lecture, but to lead you to earn profits through practical trading. Therefore, all of my courses are mainly focused on real world stock trading. Just remember, all of our courses are focused on real world stock trading. Everything I teach is based on my personal trading experiences. Now, why should we aim to earn profits midway? So just let me know, why should we aim to earn profit midway, not at the bottom, not at the top, not during the washout stage, not during the distribution stage, but during the push-up stage, right? Please let me know. Like, I have worked in securities firm from last 7-8 years, and I have gained a lot of experience. And for the people who are in the stock market, who are having a friends with in securities firm, they are much more aware how this accumulation phase take place, and we can be part of push-ups, right? Pull up. Just let me know. They can be part of a midway. So let me demonstrate with an individual stock example, right? So, is there any confusions among you all? How this is? What is washout? What is dumping? So, you can let me know. So if you want to know about the washing the market shipping, is there any market manipulation? So let me explain that what happens during the washout. I will explain you and take you through more example. So what happens in the washing out period? Just let me know. So washout means it refers to the situation where assets are sold aggressively. Just remember, it's a situation where assets are sold aggressively to drive down the price, and this may be a strategy of operators. Just remember, this may be a strategy of operator to create panic or remove weak participants from the market. So talking about dumping, it's also referred to the practice of selling a large quantity of an asset at once, often at a loss, to impact market prices or a float and undesired position. So dumping What do you mean by dumping? Dumping is a practice of selling a large quantity of an asset at once, often at loss, to impact the market prices or offload an undesired position. So, is there any market manipulation going on? So, just let me know. Is there any market manipulation going on? So, this question suggests the possibility of deliberate actions in the market aimed at influencing price unnaturally, such as increasing volatility or deceiving participants. So, what happens here? They are trying to manipulate the market, right? So, there are three scenarios we are able to see. Just look at the scenarios, we are able to see here. So these are the three scenarios we are able to see. First one is sell more, buy less, no receiving plate. Sell more, buy more, sell more, buy more. So just look at these. For the first scenario, we are having sell more and buy less. So what will happen here? Just let me know. When there are seller more, sell more but buy less, no one's take over, right? So in this case the sellers dominate. Just remember, in this case the seller dominates and there are not enough buyer to absorb the selling pressure, right? So what will be its impact? Tell me, what will be its impact when there are more number of sellers but less number of buyer presence in stock? Just tell me, if there are more number of sellers, and less number of buyers, what will happen in the stock? So the answer is price will fall significantly, which will create instability in the market. Just remember that. So when there are more number of sellers and less number of buyers, price falls significantly, which often creates panic and instability in the market. Now we are understanding these three scenarios. Between this, we have a question for Raptor. Do market operators move market prices? Yes, we are talking about that only. Market operators are the main players who impact prices, market prices. Not all of these stocks they can impact, but with a few stocks they can impact. We are learning about that, right? And just focusing on the content now. So we have second condition. What are the second conditions? In second condition, so we can see when there are more number of seller, less number of buyer, market price will be down for it. So we will just put it down. So this here the prices are falling. For the second condition, when there are seller more, buyer more, what will happen? When selling and buyer happens in a nearly equal measure, possibility to create an illusion of activity or maintain stability. So it will be a sign of stability. The volume will be low, but the price will be at constant, right? The price will be at constant. So is it deliberate effort to manipulate volumes without letting prices crash drastically? Just let me know. So is it a deliberate effort to manipulate volumes without letting price crash drastically? So it can be, right? But we can see that it is a sign where the prices will remain constant. So this is a sign when there are more number of sellers, more number of buyers, prices will remain constant. So just look at the third level. Sell more, buy even more. So description, we see selling increases but the buying pressure overtakes it. Just let me know, guys, what will happen here when there are more number of sellers but buy even more. So selling increases but the buying pressure overtakes it. So what happens when there are more number of sellers and buy even more? If there are more number of sellers, buy even more, so there will be large number of volumes, right? But selling increases but the buying pressure overtakes it in this case scenario. So what will be the implication? Can anyone tell me what will be the implication? Can anyone tell me what will be the implication of? Yes, most of you are telling, right? The price will increase, but few of you who have answered it will remain constant when there is more number of sellers but buy even more. Just understand, in this cases when there are more number of sellers but buy even more, selling increases but the buying pressure overtakes it. So what will be the implication? Buyers may be trying to accumulate assets at a reduced price. It is possibly indicating strategic accumulation or market manipulation to stabilize price. So what will happen? The price will increase. So the price will increase where there are more number of buyers and the volume will be also high. and in this case the volume will be quite less as compared to more seller, more buyer, but the price will keep on decreasing. So this is the situation where we can see a more number of sellers and less number of buyers, where the price get decreased. And if there are more number of sellers and more number of buyers, the price equals. And if there are more number of sellers and more buyers, the price increases, right? So these are the scenarios we are having as of now. Now just have a look on this. We will understand it by the practical example. Just let me take you through the practical example. So we are searching for example. Just I am taking you to the TradingView platform here. Just look at the practical example, right? So we have identified one of the stocks. Just look at it. We have identified ES Films, right? So we will just go through it and make it more clear. So we'll just identify where the operators are making positions, right? So just make me sure you are understanding each and everything. So here we can only see the price factor, but we will add the volume to understand more. So just I am adding up the volume here to make you understand it more clearly. Just now, just have a look from starting from last December, right? Starting from this December, starting of this year, can you identify the presence of main funds? Just let me know. This is the chart I am having for last 3 months, only 3 to 4 months. So can you identify the presence of main fund? Please let me know if you can identify the presence of main fund here at this point. Can you identify the presence of main fund, guys? Please let me know, so I will be having a clear understanding that you are understanding each and everything. Can you identify the presence of main funds? So just let me tell you. Yes, most of you are telling right. So some of it is telling 190, someone is telling 250, someone is telling 350, someone is telling at the 600 level there are presence of main funds. So let me clarify you just by looking at the candlestick. Please let me clarify you, right? So we can see, let me zoom it for you. We can see the presence of main fund at this point, right? Presence of main fund at this point. Why there is a presence of main fund at this point? Because the stock price is rising continuously. The stock price is rising continuously, right? Just look at the level. The stock price is rising continuously here. At this level, the stock price is rising from 135 to 400. And just look at the volumes. If you look at the volumes previously the volume was quite less. So just look at the previous volume. The volume was quite less, right? The volume was very less here at this point of time. And now we can see a screen increase in the price of this stock at starting from 138 to the price of 391. They have increased their price a lot. So these are the levels we are seeing for the main funds. So just look at these prices. It has been consistently increasing till 138 to the price of 389. So are you able to identify the presence of main fund? Yes, we are able to identify the presence of main fund at this position, right? So let me make a clear understanding for you. Let me make a rectangle so that you are able to understand each and everything for the better understanding. Starting from this point, 138, we can see the presence of main fund till this point, right? So we can see a presence of main fund. I'm just zooming for you to make a clear understanding so that you are able to understand. It's not me who needs to understand. We already know where the position of main fund is established. We are teaching you to make you understand. So just be focused on the content and we'll be teaching you a very clear idea and you will be able to pick up the stocks very independently for your investment. So just look at this level starting from 135, they have made their positions till 390, right? So this is the main fund entry. We will just add this towards the volume 2. So just look, previously the volume was quite low, right? The previously volume was quite low, and now the volume has sparked up. So just look at the volume. Volume has just sparked up to a greater level, right? The volume has just sparked up. Now, if we talk about, if we remove the volume part, no, now we remove the volume part, we're just removing the drawing. Just look at it. Starting from this, the main funds have made their position till this point, where the volume started decreasing consistently after that. Just look, the when the main funds were making the position, the volume was very high, and now suddenly the volume has decreased a lot. The volume has decreased, right? When the main fund have built their position, now we will have a look what will be the cost of main fund. Just tell me what will be the cost of main fund. I will wait for 30 seconds. Please let me know the cost of main fund. These are the two sessions we have been discussing it continuously. Please let me, please write it, please write down the cost of main funds. I am giving you time, guys. Please write the cost of main funds. What will be the cost? So we are seeing the replies. They are coming 130, 135, 300, 200. Right? So let me check you. Most of you have replied correct. Correct, right? But let me tell what is the correct answer for it. The cost of main funds is from starting from 134. The cost of main fund is that till the level of 384, because we are seeing a continuous increase in terms of volume which are in bulk level and a continuous increase from this price to this price, right? So we can clearly identify the presence of main fund at this price, and this is the cost for main funds starting from this level, right? So starting from this level, just let me check, till this level we have a, this is the cost of main fund. Just remember what is the cost. The cost of main fund is 133 to 135, 133 to the level of 389. So this is the cost for main funds. Just be assured this is the cost for main funds we are having as of now, and this is the volume, this is the position, this is the position the main funds have made. So what will be the cost? It ranges from 135 to 383. Am I clear, guys? I hope I am clear because I've been teaching this for last 2 days. And if you are still not clear, please watch our last two live streaming and be very active during the third one. So now have a look on it, right? So we can identify the cost of main fund, but where you should make your entry. Just look at the price. Just look at the price where you should make your entry. Please let me know where you should make your entry in this stock. Where you should make your entry. Please let me know where you would be making your entry. At this phase, you would be making your entry. Do you know what this phase is called? Can anyone tell me what this phase is called after the operator mid position? What this phases is called? Can you tell me? Can anyone tell me what this phases is called? So it's a very silence for you, I guess. So yes, the answers are appearing now. The answers are appearing. Yes, this is the washout phase, guys. This is the washout phase. So I will just make sure I am writing this as a washout from starting from where main funds have closed their cost, right, till this phase. There is a washout phase of retailers going on. So what the phase we call it we call a washout phase, right? So this is the phase which we call a washout. This is the phase of washout phase. So what here occurs? What the operator does usually? At this position, what happens to the retailers? Just tell me. So what this phase is called? This phase is called washout, where the price keeps on fluctuating and the retailers, the most of the retailers will be out of the market, right? So this is not the position where we make entry. Suppose remove this part starting from the 370 level, remove this part and just be active here, right? Think this part is not present. So what you will do? You make your positions at this point. What if the stock kept on falling? What if the stock kept on falling? Just tell me. What if the stock kept on falling till the levels? Till which level you will buy that stock? What if the stock falls to the level of, what if the stock falls from 390 to 300? Will you hold that stock? Will you hold that stock? So many of you are confused. Either we should hold, someone is telling we should sell that stock, someone is telling to average down, right? So let me clarify you. What if the stock falls even more? What if the stock falls towards the level of 130, 140 level, where the main points have started making their position? Will you be buying again? Will you be buying again and entering the stock again? Just let me know. Will you be buying again? Right. So let me clarify you till where you will be buying. So just look at the price. It has started from the level of 135. I'm taking 135 as a base point where the main fund started making position till the base point of 381. So this is the point where the main, this is a 50% of the, this is the 50% where the stocks have been made. So you should be making, just make me sure I am giving you the correct information, right? So this is the point where the 50% mark take place, where the 50% mark take place when the operator have started building up their position. So you should be buying till the price of 260 to 270, not below that. So just remember, when there is a washout phase, the price cannot fall more than 50%. So for a washout phase to take place, the price cannot fall more than 50%. And if it falls, suppose if it falls, right, we have, this is a washout phase. Suppose it keeps on falling, we cannot stop. If it keeps on falling and it has fallen down more, if it is more than 50%, so what we will call, this is the distribution phase. You have to be safe from it. It cannot happen that when the stock is having a washout phase, it falls more than 50%. When the fall of more than 50% occur, what that phase is called, we call it as a distribution phase. Just remember it. We call it as a distribution phase, which is not a right place to enter. We are avoiding a washout phase to enter, right? We have already discussed about that. We are not entering into the washout phase. We are not into the distribution phase. So these are the two scenarios we will not be considering for the entering. Now have a look. If it is, I will just make a note so that you are able to understand it more clearly, right? If a stock not falls more than 50%, it is it is called was out of retailers. And if it is fall more than 50%, just remember, if the stock falls more than 50%, right? If the stock falls more than 50%, it is called distribution. So if the stock falls more than 50%, it is called distribution. So we are not considering either a washout phase to enter, neither we are considering to enter the distribution phase, which is quite risky for all of us. We all know that, right? So now I hope you have got a clear idea about it. If the stock falls more than 50%, it is called washout. We can call it a washout, where they are tailing the pressure, they are creating the artificial pressure and taking out the retailers. But the stock falls more than 50%, it is called distribution. We will be not entering at that phase too. So now just have a look what will be the phase. So here the accumulation of the stocks have started taking place, right? So I'll just add a text for you guys. If the stock falls, right? If the stock not falls more than 50%, it is called was, or if the stock falls more than 50%, it is called distribution. Just remember what will be the distribution phase below 260, there will be a distribution phase for the stock. Now, this is called a washout phase. We all know this is called a washout phase. So we'll just add that up and write it, right? So this is the point A. This point is called a washout phase. Here we are seeing a wash out. Here we are seeing a washout phase for a stock. Right, and here we are seeing the accumulation phase, which we have talked about, right? So this is the accumulation phase we have. Accumulation phase where operators start making their position in it, right? And here we have a washout phase which occurred as a second stage. So now have a look, if we are seeing a washout occurring at this stage, right, at this level. Now what is happening? The pull up is happening for a stock. So we should be neither a part of accumulation, because we don't have a first hand information, so we cannot be a part of accumulation. Neither we should be a part of washout, because the washout, if it falls more than 50%, it will be called a distribution. So now just have a look, when the stock price increases, it's a pull up, right? Just look at the Excel sheet. I will take you more deep. So just look at this stock. So here the pull up is occurring when we have seen opening of a position for operators. Secondly, we have seen the washing have been done. Now the pull up is going on. So we should be a part of pull up only, not of anything else. So just have a look. So we are having a part of pull up when the stock price is increasing at this point. So just look at it. This is the pull up phase we are seeing as of now, right? So this is the pull up phase. We should be a part of pull up phase only. And here the distribution is going on. Just look, here the distribution phase is going on. So this is the part of pull up. So here the pull up is going on, and this is the correct position where we should be taking part. So pull up is a phase where we should be taking part upon, and this is the correct way where we will be making our money. Just remember, this is the most important part for all of us. The pull up part, this is the important part where we will be making money. We should be entering at this level above 400 and start making money till 600. till the distribution starts, right? And what the phase this is called? This is called the distribution phase, when the stocks have gained, right? The washout phase have occurred, the pull up has occurred, now the distribution of the stock is going on. So it's not a good sign for an entry. The distribution is taking place, right? So just look, the distribution is taking place continuously here. So this is the phase, we call it as a distribution phase, starting from this to this. What we call it as a distribution phase. Just look at it. This is the distribution phase. This is the fourth one which we have discussed. Distribution. So here the operators का खेला हो चुका है और हमें एंट्री नहीं लेना है. Just remember that operators have played very well and we are not taking entry into it. So I hope if you have understood it very clearly, it's very good. Even if you haven't understood, just take a screenshot of it. I am waiting for next 10 seconds so that you are able to take the screenshot and be and able to understand whenever I am not present, right? If you have any doubts, you can just take a screenshot and be active on it. Right, this is the phase called pull up, and here we can call it as a, and what this phase is called, this phase is called distribution. Just look at it. Now let me explain it more deeply, right? So what this phase is called, we have started with the lessons that we call it as a distribution phase, right? We call it as a we call it as accumulation phase, where the accumulation take place in the stock, right? Where the accumulation is started taking place by seeing the candlestick, the K lines, the volumes, we are able to identify the increase in the price, the cost of the operators where they are making position. Secondly, we can see the phases, the washout phase is occurring. So just remember, if the washout phase is occurring, it doesn't fall more than 50%. So I have written that if it falls more than 50%, it will be called a washout. If its stock falls more than 50%, it is called distribution. Just remember, if it falls to the mid level of it, 260, till it's okay, but below that it's a distribution phase and we should not participate in it. So once they start, when the stock washout phase gets over, and when the stock gets above the level of 400, then the price start increasing, and it pull ups to the 650, 670 level at this level. And now when the operators ka khela has been done, there has been a distribution phase for the stock has started. Now it's very risky to be a part of distribution and make profit, because it has more of a risk and less of a gain. So we should be part of a pull up which we have made our entry, right? So we should be part of pull up only, where we can just take the benefit of momentum and make money for us. So I hope everyone, each and everyone attending this session is very clear about it, right? Now let me take you to the slides. So I guess if you haven't understood, just let me know in the comment section and take a screenshot of it. Now let me make you go through our slides, right? And then we will be explaining more of a concept and concluding the session. So we have talked about opening up a position, right? Where the main operator starts opening up a position. We have talked about that. When the candlestick remains at a very bulk manner, they start increasing in a continuous manner, and the volume is in hippie in the large piled up. Secondly, we have seen the washing out phase, where the operators tries to manipulate market in such a way the retailers are shaken and thrown out from the market. Third, we have a pull up phase. What happens in the pull up phase? Pull up phase is a phase where the operators and the big investors start pulling up the stocks once again, and at that position only we have to make our positions and gain some money by taking the advantage of the sentiment of the market. Fourthly, we have seen the shipping. It shouldn't be our part, because the distribution phase take place and it's very hard to make money in the distribution, right? So We have seen the digging for bull stocks with a spin upward trend. We have talked about it. We have seen sell more, buyer less, no receivable pay, sell more, buy more, and sell more, buy even more. So that is the case where we will be having a lot of increased volatility. The price will increase. Right now, we have talked about this phase. What this phase is called? This phase is called the wash out phase. This phase is called, we have taken example, so this phase is called the wash out phase. Wash out, right? Wash out phase, we call it a wash out phase, where the wash out material is going on and suddenly the stock price start increasing and we cannot stop it. So this is the phase of wash out. So secondly, we have an amount. We are talking about volume a lot, right? So talking about volume, when we see the volume is increasing, there will be a big difference. Buy and seller will be more. There will be active trading and large turnover. Just look at it. It's very clear from the charts that the volume are very big. This is the first point we are seeing. There's a large and piled up, right? This is large and piled up. Thirdly, we have what? Thirdly, we have active trading going on and in large turnover. So here is a big difference in the volume. The turnover has been low, turnover has been very large. The active volume has increased a lot, right? The active volume has increased a lot. So these are the things which we are able to see in any stocks. So it is very interesting to see that Hers have also Riptide has also replied. It's very interesting concept. Yes, it's a very interesting concept because we are understanding the operator ka khela, how they play into the market, and we can be part of it and make money from the market, right? So these are the things which we are able to see, which are taking place and making money for you. Now just have a look on the PPT, right? Just going back to the PPT. So we have talked about the amount volume. It will be a big difference. We are seeing at there will be more number of buyers and seller more. The active trading will occur. The large turnover will be there. Secondly, we have seen the condition for selecting stocks. So what will be the condition for selecting stocks? How can we identify there is a presence of main funds or not, and what will be the conditions for selecting stock? So let me take you through that. There will be a main force admission. This is the obvious reason where we will be selecting stocks, because we all know the stocks without main force, the stock without operators are not worth touching also. So we will not touching that stocks who don't have the main force, the operators in it. So the main force appears, it is accompanied by large volume pile during the entry. We all know when the main force enters, when the operators enter, the volume become very large because there is a high trading volume occurring, right, during the entry. So plate washing control ability. What happens during the place washing control ability? The strong control is evident through, right? The strong control is evident in the stock. The small callback amplitude and short callback time is there, right? The control in the stock is very evident. The small callback amplitude and short callback time is there. Thirdly, we have efficient positioning with a short wash duration is there, right? So washing that does not break key position. When the washing out take place, it shouldn't break the key position. Like we have talked about, more than 50% shouldn't be broken, or it will be a distribution for the stocks, right? So maintaining the previous round high as a reference point and the first round was as a low base. So what will be happening, how we can identify, they will be having a previous round high as a reference point and the first round was as a low base. So we can be identifying the price of it by looking at this level. So what are the active sections? Middle section will be exhibiting strength. So just look at the stock which we have discussed. The middle section will exhibit strength. The start signal is obvious and will be clear, and we will place the stop loss at the starting point. We have seen it. We have placed the stop loss at the starting point of it. Now lastly, we were talking about how to choose good stock. So we were talking about how to choose good stock, right? So good stock wash out. When good stock wash out take place, there is a control. So just look at it. If it is washing out, when the good stock is washing out, there is a lot of control in the market. It's not that there will be a decrease in the price, there will be a control in it. Just remember, there will be a control when the washout is taking place. It can't be that the price will kept falling. So just look at this level when the washout was taking place. Taking you to the trading view, when the washout was taking place, starting from the level of 394 till the level of 358. So this was the washout phase. Just look at it, and then there was a control in it. It's not that the washout was so deep that it kept on decreasing, and they were not able to pull up the stocks. They were having a strong control in it, and they were able to pull up the stocks and make a new high at the level of 600, 60, and 700 levels. So they have pulled up that stock. So now have a look on the PPT we were talking about, right? So when a good stock, when the washout take place, it has a control in it. And when the stocks drag down, there is up money pressure in it, right? When the stock drags down, just look at the trading view. So when the stock pull up take place, there is a strong money pressure which pulls the stock, and it keeps on increasing as a second phase. So at first phase we have seen the accumulation have took place. Secondly, we see that washout is taking place. Thirdly, we see the pull up is increasing continuously. And thirdly, fourthly we can see the distribution is taking place, right? So I hope you got a very clear understanding what happens in a stock and where we should make a entry and how can we be profitable by W pattern, right? So we should be a part of W pattern, and we should be a part of pull up phase. Then only we will be able to understand where to make money. So let me go through very quickly and close up the session what we have discussed today, right? So we were talking about how to find buying point of a leading point, right? So we have talked about open a position when the operators start opening up a position. So this is not in our hand because we are not the operators, we are the retailers, which lacks the first hand information, right? And operators have that information where they can enter and make money from the markets. Secondly, we have a washout phase. What does washout phase occur? It occurs when the operators try to shake the market and take retailers out of the market, right? Thirdly, we have a pull-up phase, and this is the phase we should be a part of it and make money for us, because we can only be sure retailers have a little funds, right? So retailers have a very little fund, so we can only be a part of pull up. When washout take place, we cannot be a part because it take times for it, because operator make positions for a longer term and they increase the stock price a lot. And talking about fourthly, we have a shipping. Talking about shipping, it's a distribution phase which have a very high risk and low return, and pull up phase is there where is a low risk and high return. So this is the phase which we consider for entering, not washout period, not opening a position, not shipping. So these are the three phases which we are not considering for entering, right? So this is the thirdly we talked about digging for a bullish stocks with a main upward trend. So in that we have talked about sell more and buy less, no receivable plates are there. What will happen when the seller will be more and buyer will be less? So there will be less of a price will be going down, right? And secondly we talk about if there are more sellers and even more buyers, what we will do in between that, we will be seeing that the price will keep decreasing, and so price will be constant at this level because there are large number of sellers, also the large number of buyers are there. Thirdly, we have seller more but buy even more. So buy even more is there, then what will happen? What we will see, the price will increase constantly and it will make a good high, right? So this is the PPT for the washout phase. We are seeing the operator has made their position at this level, the washout is taking place, and again there was a pullback. So we can be a part of this level where the pullback is taking place. So we have talked about volume. So what will be the volume when the operators make positions in the stock, so there will be having a big difference from the previous levels. Secondly, we will have a large number of buyers and sellers, right? There will be active trading going on in the stock, and there will be a large turnover in it. So these are the conditions for all of it. So what are the conditions for selecting stock? We have to identify if there are main force admission or not. The main force is obvious, which is accompanied by a large volume pile during the entry, right? There will be a strong control in it, and the middle section will exhibit strength. It cannot be that it keeps on falling, right? I also place a lower stop loss at the starting low point. We have discussed about it. And lastly, we have talked a good stock was out, there is a control in it, and stock down drag, there's up money pressure. So I hope you got the clear idea. For the homework and assignments, I make sure you are giving me the three stocks where you are finding the W pattern and where you can see the pull up is taking place, and just send it to my assistant, and I will guide you personally and just check through it. So till next session, happy investing.